Nobody ever made a dime panicking. No matter how many times I've said that, it always feels like the first utterance. But if you match yesterday's carnage in tech with today's bountiful harvest of winners, you know why I have to repeat myself. If you panicked and sold tech yesterday, you missed today's cornucopia of tech winners, with the Dow gaining 137 points, S&P climbing 0.92%, but the NASDAQ filled with tech going up 2.03%. Now, before we dig into what happened today, I want to emphasize that when I say no one ever made a dime panicking,
Jim Cramer stresses the importance of staying calm during market sell-offs, emphasizing that panic selling leads to losses. He highlights how Nvidia and other tech stocks, which saw steep declines yesterday, rebounded strongly today, proving the value of patience. Nvidia, in particular, recovered nearly 9% after fears about reduced chip demand due to efficiency gains were overstated. Cramer argues that Nvidia remains a market leader, having built the AI chip industry through massive investment. While concerns about reduced orders surfaced, he believes Nvidia's innovation and dominance in advanced technologies like robotics and AI ensure its long-term value. He advises investors to avoid impulsive decisions during volatile times, noting that those who held their positions saw better outcomes as stocks rebounded. Patience, he says, often leads to better opportunities and prevents unnecessary losses.
I'm actually not even talking about being opportunistic. I'm saying that if you wanted to sell Nvidia into the worst single-day loss in history of a market capitalization, then maybe you learned your lesson as the stock bounced back furiously today, up nearly 9%. Because as bad as this deep-seek thing might be for Nvidia, it might not be that bad. No, it's not back to where it was. I get that, and maybe it shouldn't be. But it really got oversold, and therefore it caught a bounce when there was only one downgrade and a lot of positive chatter that it isn't over for what was not long ago the world's largest company. I get that it wasn't easy to do nothing. You had to sit on your hands. See, you had this Chinese alpha come out of nowhere and announce basically that you don't need as many Nvidia chips as you thought for AI because you can get much more out of each chip, maybe 10 times more if you just use their software. Now, that's pretty much what DeepSeek was offering. And it's certainly a frightening prospect for Nvidia, as the company has been perceived to be a monopolist that price gouges. Now, the way I see it, that's nonsense. Nvidia invented this business, spent billions upon billions of dollars building it up, and it simply charges what the market can bear. Until last week, we figured that to get most tasks done, to get the best use out of Nvidia's product, you had to order a colossal number of chips at obscene prices. Now, though, if someone comes along and says, hey, you know what? You can get 10 times as much output from an Nvidia chip that you thought, you got to figure you only need to order 1/10 as many chips as you thought you needed, right? Isn't that the math? And that's why Nvidia stock got obliterated yesterday. What if everyone who's ordering these chips cancels 90% of their orders? What if you only need 1/10 of the data centers you planned? Okay, that is enough to scare anyone. But fear doesn't necessarily generate the right decisions when it comes to the stock market. Remember, I'm not talking about being opportunistic again. And buying Nvidia this morning when it went from +4 to -1. I'm just talking about not selling you the biggest rout in history. Or to put it another way, because I really am trying to get this point across, obviously, doing nothing was actually a great strategy. You didn't expose yourself to more risk, and if you're truly worried that Nvidia might lose 9/10 of its orders, you got a chance to sell at a much better price simply by waiting a day. Sell, sell, sell. The panic yesterday was so palpable that people even sold the beneficiaries, the companies that are doing well and might even do better if DeepSeek's formula for success spreads. Bunch of knuckleheads. At one point yesterday, we saw some huge potential winners get hammered as stocks like Meta, Microsoft, Amazon, Alphabet, all four of them came roaring back today. They were all fabulous buys.
House of pleasure.
Yes, panic can cause smokescreens that obscure what, in retrospect, were some fairly obvious opportunities. If Meta's buying 500,000 chips from Nvidia and the price of those chips comes down because people realize they don't need as many, well, how is that negative for Meta? The only way to frame this as a negative is if you got a problem with arithmetic, in which case, instead of doing this, I suggest some remedial math classes might help. All right, irony of ironies. How about the fact that Apple, which had been in freefall for weeks, has made an abrupt U-turn 2 days ahead of earnings and has now rallied from $222 to $238. How crazy is that? And once again, I'll remind people that I want to own Apple, not trade it. That's how we feel for the trust. But a lot of people sold it yesterday at $222. I wonder what they're thinking. That said, if you can't handle the fear of owning the stock of Apple through a quarterly report that is almost universally regarded as horrible, awful, and miserable before it prints, which it's going to do on Thursday, well, you're now free to sell the stock at a much higher price. I say go forth and sell. Some stocks were hailed correctly as winners in this environment, mainly the companies that benefit from less expensive hardware like ServiceNow, which rallied another 2.6% today, and Salesforce, which gained 3.7% on top of a colossal gain yesterday. We're going to have CEO Mark Benioff to talk about this new DeepSeek and how it seeded the world later in the show. But now let's get back to the real issue here, because I got to make another point. If you made it through yesterday's cataclysmic drop and still own the stock of Nvidia, can we just stop for a second and think about what DeepSeek might really mean for this incredible company? First, it's entirely possible the companies will place smaller orders if they can really get much more use out of Nvidia's chips. It's just possible. The price of compute could come down. That's understandable. If a company's setting up still one more AI-powered customer assistant, then it's entirely possible that there won't be as much demand for Nvidia's highest-end chips. If that's the case, you could argue that you might even be able to use less powerful chips, from AMD. Salesforce is the king of the AI-powered customer assistant, so it's a gigantic winner from DeepSeek. The more commoditized the hardware, the better off for Benioff. But what if you're thinking much differently? What if you want to create a world of specialized robots that can do anything humans can do physically and do it better than we can? Actual physical robots, humanoids, call them whatever you want. Can DeepSeek do that for you? Does DeepSeek help you create the best self-driving cars? Does it keep your data private? Or like TikTok, does it just turn out to be a way for the Chinese government to influence us and gather our information? But one look at the incredible run in the cybersecurity stocks tells me that someone besides me has thought about the implications. Do you think the stock of Charitable Trust holding CrowdStrike doesn't go up $34 or 9.35% in a single session for nothing? And then there's something else that bothers me about the slam job on Nvidia, with Wall Street suddenly treating it as a commodity chip maker, like some sort of Intel not deserving of $1 trillion valuation, let alone a $3 trillion. We may have just found out about DeepSeek because we read about it in the New York Times. Is it really possible that Mark Zuckerberg from Meta, Larry Ellison from Oracle, Elon Musk from everywhere, guys who've been ordering chips, NVIDIA chips, the most aggressive, expensive kinds, like mad, do you really think they were blindsided? Do you really think they didn't know anything about this? Were they as clueless as the people who sold NVIDIA in yesterday's Vortex? Were they so involved with President Trump's initiative and so eager to please the president that they ordered billions of dollars in chips just to show they liked them? Somehow, I don't think that makes a lot of sense. I hope you don't think so either. These folks didn't just fall off a turnip truck where they were frantically trying to buy some Blackwells. Here's the bottom line. The shoot first, ask questions later approach works when there's fraud or chicanery and we know we must sell. But when things are complicated or murky, it might not make sense to help create the biggest single-day dollar loss in history, chums. There's a better way. Just don't do anything. If you really want to sell, you can do it into the rebound the next day. In my experience, after one more dip in the morning, you almost always get a better price.
Let's talk about these committee moves that we have to document for you. Josh Brown, you trimmed 3M by 20%. That stock hitting a new 52-week high today. Can you take me through the thought here?
Yeah, this has been a fabulous trade. It popped up on my list of the best stocks in the market. And quite frankly, it never really left. Now it's trading. So I'm in it at 100. So I'm out at 150 and change. Now it's trading at 3.1 times sales, which is higher than the industry average of 1 times. And higher than the 1, 3, and 5 year median valuation that people have paid for the stock. I understand why. It's because the turnaround is working and people are excited. And that's why I'm keeping 80% of my position. But again, it's up 16% since January 1st. It's up 87% in the last year, 15% over the last 30 days. So I need capital to do other things. This thing's had a huge run. I'm just right-sizing the position, but planning to stay long.
Steph, you're in the name.
Yeah, and I thought the quarter was just so-so. It was kind of in line, but what was encouraging was the organic growth was double the expectations. Yes, only 2.1%, but this company hasn't grown anything organically in years. And so their guidance of 2 to 3% for the full year, really encouraging. The restructuring is actually almost complete. So if you can get that higher organic growth, you're going to start to see more margin expansion and operating leverage. And Bill Brown, I think he's in like the third inning of his tenure at the company. He's got a great track record. I do think it's not as cheap as when I was buying it when it was 11 times earnings. It's at 19 times, but I still like it a lot for the long term.
Jim Cramer stresses that panic selling never pays, using Nvidia's sharp rebound after a historic loss as an example. He emphasizes staying calm during market turbulence, noting that holding steady often yields better outcomes. Despite concerns over a rival's efficiency claims, Nvidia's long-term value as an AI chip leader remains strong, supported by its pivotal role in tech innovation. Cramer also highlights the broader tech rebound, with companies like Meta and Microsoft recovering as the market corrected its overreaction. He advises investors to avoid impulsive decisions during uncertainty and instead focus on the long-term potential of solid stock. How do you handle market volatility to avoid emotional decision-making? Do you believe Nvidia will maintain its leadership in AI chips despite recent challenges?